following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. And we're off 1/2 point on the S&P cash. Volume is coming in a little bit better than probably I thought earlier in the day. 2.4 billion shares on the New York Stock Exchange. And what else is going on out here? Well, you know, we're tapping, knocking on that door of 2,200 on the S&P cash. And, of course, the 19,000 on the Dow. That'll probably be the headline tonight. Not a lot of people wanting to get too brave going into what is a long weekend. This is my last show of the week. TFNN is closed on Friday, so we'll see you next Monday. But not a lot happening out here. Volume a little bit better, though, than I would think, and that's a little bit better for the bulls to be breaking new highs and having at least some decent volume. Tomorrow, the volume will probably start tapering off about 10:30, maybe 11, and then just look for a very sidewaysy market as we go into the weekend. Is there a great deal going on out here to scream or yell about? Not really. My guess is that they'll push this market up late in the day. Have a few people, I think, trying to short this high. Probably a bad idea. If you wanted to short, you know, we would have had a fairly decent reversal already. Only a half day on Friday. Pretty much sets you up for a move next Wednesday. Next Monday or Tuesday, either higher or lower. But I don't think you can... if you got positions on now, you probably can keep them. If you're thinking about adding new positions, I would imagine that the risk reward for adding a new one, probably not there into next week. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And he got the little ditty in there. So what else do we have going on out here? Well, like I said, not that much. We got some earnings. We're going to go through those. Got a lot of interesting news, although it probably won't make an instant change in the markets out here. But it's time to get this party started.
And it's all just a little bit of history repeating.
On this day in 1988, in the presence of members of Congress and the media, the Northrop B-2 stealth bomber is shown publicly for the first time at the Air Force Plant 42 in Palmdale, California. The aircraft, which was developed in great secrecy for nearly a decade, was designed with stealth characteristics that would allow it to penetrate enemies' most sophisticated defenses unnoticed. At the time of its unveiling, the B-2s had not even flown a test flight. It rapidly became under fire for its massive cost, more than $40 billion for development, and at $1 billion for each unit. They were going to make 150 of them. They ended up making 22 of them. Almost all of them have the spirit of something as their name, and they flew out of a little air base called Whiteman Air Force Base. Just a little east Kansas City. And I got my pilot's license in 1986. Yeah, 1986. It was flying around all over there. Those became a big feature of that base, along with A-10s. And, you know, just, 30 miles, 20 miles east of Kansas City. So if I was flying St. Louis way or flying anywhere out, it was not uncommon for me to fly over the airbase and see 10 of these things sitting out on the runway and or be flying along and one of these big batwing things would come along. And I have to say, on the ground, they look a lot different than when you look at them in the air. And between avoiding those F-16s, B-2 bombers from over in Wichita, I was quite busy if I flew, east or west. North or south, not a big deal, but east and west of Kansas City, a lot of military action out there, but certainly a very interesting thing to be out in a little Cessna putting along at a mere 120 miles an hour and have B-2 bombers going by at 480 knots, 50 feet over the top of some cows down below you, and have the air traffic controller saying, you got a B-2 coming in at 480 knots over the west. You got a B-2 bomber coming in and descending upon you on 15,000 feet. But, you see these things on the ground. It is very, very different to see them in the air. Anyway, they were going to build 100 and whatever it was, 50 of them. Ended up building up 22 of them. And, of course, by then the Soviet Union had imploded. And they're now working on the replacement to the B-2. It's going to be called the B-22. And probably going to be out another couple of years. They've been working on it for a while. Build about 20 more of those, too. But a lot of advancements since all this technology, which was really kind of early 1983, probably about the 84, everything in it. Pretty interesting planes, though. If you've been in the cockpit, I was in a mock-up of the cockpit. Very, very roomy. Normally, planes don't have a lot of room. These things you can kind of sack out in the back. Kind of interesting. Anyway, on this day in 1988, the first time the stealth bomber, the B-2, the Flying Wing, is shown. IBM is not planning to leave the EU and or England. IBM's going and doing the opposite. It said it will triple the number of data centers it has in the UK. This is kind of the first step of people saying, you know what? Brexit, smegment. I don't care. We're staying. And my guess is this is the first of a bunch of companies to start figuring out that this is probably not going away anytime soon. And probably not a bad idea to get in while the getting is good. Get on the ground floor. But data, especially data storage units inside a country, gives you a leg up in that the U.S. government can't tell you to fork over all their data. I think this is going to be the model of just about everything going forward. A lot of news in that sector today. We'll get to that in a second. Amazon Web Services announced also today that a significant price drop for some of its storage services. In addition, it's also launched a few new features for developers who want to use its Glacier cold storage service. Everybody thinks that web services is all about running a website, but it is a lot about storing data. We'll talk more about this when we come back. But, they have a thing. They have literally 3 tiers in web services. One where you get instant, really fast data. One where it's come up in 5 seconds. And one, it may take 5 minutes. Interesting. We'll be back shortly.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we're back, I just wanted to talk a little bit about it because it does look like there's more pressure, especially on those that don't have a lot of services to sell. Most people think, well, you know, Amazon Web Services, Google Web Services, Microsoft, Oracle, all these guys have their own data services companies. But these things are the lost leader. It is the cheap razor blade handle and the very expensive razor blades. Although you don't have to buy the razor blades in this model, but most likely you go to a carrier that makes something that is of a big value to you. So they price the cost of the actual computers that you use and the prices of them on per minute fairly low, and then charge you for all the kind of software that you use on the other side. Let's say that you're a company that dabbles in financial news and has a bunch of guest hosts that Skype in and have an hour-long show each day. You probably need to send the video and audio back out, so your service may have a bunch of modules in it that actually handle video and audio compression and getting them back out and the data in and out. You may need specialized hardware in the case of being a big company that works as a financial broker and distributing all that data. There's a lot of different kinds of packages out there that they will add on, and that's where they make the absolute huge bucks on these. The data itself is a loss leader. Anyway, very interesting that data storage is now really falling down in price, and we're talking about some of these prices. Well, the prices on the data that is instantaneous has dropped by 20%. But when we actually look at some of the other ones out here, we're talking about not 4 cents a gigabyte a month, but 1/10 of that, 4/100ths of a cent a month, and that's a 43% drop. So if you don't want to keep your data, if you want to put it somewhere safe with backed up power supplies, you certainly can get it. But there are 3 tiers. There's the very, very fast data access. A lot of times the hard drives in those machines happen to be SSDs or some other RAID system for a lot of fast data. There's kind of a second tier that has regular hard drives. There's kind of yet another tier that Google really pushes, and that's what's called near online storage. And then you have the what Amazon calls is its glacier storage, where it may take 5 or 10 minutes to get your data back from you. So you're probably not going to be using that much. If you had to make a customer wait 5 seconds, that's kind of an interesting idea, and that's kind of what Google pushes. But very interesting that once again we're starting to see prices drop again in this service. Amazon has kind of led the way along with Google in a price war, almost the equivalent of gas wars in the 70s. I guess it would probably have been pre-70s, wouldn't it? Probably not a lot of gas wars after. Although we did have a gas war over on the west side of Tampa last week for a very short time. But anyway, all this stuff is, when you want to figure out how much this stuff is, like Google's cold line services, 0.7 of 1 cent per gigabyte per month for storing data, and 5 cents per retrieved gigabyte, so a nickel. So if you're not going to use anything, you just need to put it off somewhere. In the old days, you would have a company, they'd take all your files. If you were an attorney, you had to keep them forever. Now you can, if you digitize them all, you can hand them off and pay almost nothing if you need them. And it's a nickel per gigabyte. Probably not going to break you if you're a big company or even a small company. But the days where big systems probably reside locally at businesses continue to kind of wane in the future. We talked a bit about what was going on with Netflix and some of the other streaming services out there, throwing huge amounts of money and rather dubious returns, at least some of them. We were looking at, what do we call it, home box office with its new investment of over $100 million in Westworld. A lot of people have quit watching it, and they got about 2 or 3 episodes in, and I guess it got slow. I haven't watched it since the first episode. I thought it was dramatic and good looking. I normally wait until all the episodes are done, and I like to kind of binge watch them. But a lot of people talking that maybe those things haven't gone. Again, I continue to say there is a reason why content and distribution companies tend to have very low price earnings multiples, and that is, it is not uncommon for a huge amount of these things in one swoop to all come up snake eyes. Dave Chappelle is getting upwards of $60 million to make it. Now, he's a pretty good comedian. He was on Saturday Night Live, I think, what was it, last weekend or weekend before. He's still very funny. If he doesn't go nuts like he did, whatever it was, 5 or 10 years ago, and just walk away from everything and go hide out in Ohio for 5 years. Seems to be a little bit more balanced than we saw him last time. But the question is, when you throw that much money on them, are they actually ever going to pay it back? There's a certain amount of people that will watch Louis C.K., probably a certain amount of people that watch David Chappelle, too. He's pretty good on Comedy Central. The question, he still is getting a point across, even if it's political, but getting it done with a smile on your face, which is also the tough part. But again, huge, huge money that Netflix is throwing. And my guess is that almost like every other movie company in the world, or ABC or CBS, they will have years that they can't go wrong and years that they can't buy a hit, even if it was popular the day before. And again, very closely watch PEs. Historically, these things have been rather low. Netflix is amazingly, massively high. probably for what it is. I think that's kind of it, isn't it? Was there one other thing I wanted to talk about? Just interestingly enough, the public enemy number one of Venezuela is a elderly gentleman. I guess he's 4 years older than me. Not that elderly. Mr. Diaz is a 60-year-old man. He is the number one public enemy of Venezuela. He runs one website. And what does it do? It shows the price that you should be paying in the black market in Venezuela. Kind of interesting to think that one man can actually make a difference in the entire world these days. But one guy may be bringing down the entire communist bloc of Venezuela. And, of course, a country that lives like North Korea, even though they have the wealth of the Mideast. Very interesting. But continuing problems in Venezuela. We'll be back after this time.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And 2198 on the S&P 500, 2.6 billion shares as we get into the bottom of the hour. And, we had some earnings we'll get into a few of them next Tuesday, but kind of quiet. And then we'll get into December, and their earnings probably pretty much fall off. Don't have a lot more. But we did have some nice movers out here before the bell This morning we had Burlington tote outlets. Maybe the cold was enough to fire up a little bit of what's going on in this one out here. Headed back up to its previous high of not that long ago. Spiked on September 13th with 1 million shares. 5.3 million shares still have about a buck to go to meet this September 13th high. Nice gap out here, decent energy. Nothing to say out here other than you get a cold winter. This thing may have a little bit more legs in it. CPB. Time to have a PB&J and some tomato soup if it is getting cold in your neck of the woods. Nice pop on this one. Not a lot of juice so far today, just 2.8, and we'll call it 2.9 million shares. This is actually coming back into a gap down on September 1st. That came on almost 8 million shares, so fairly light. About 59 would be a target out here if you thought about shorting it. I just don't see that much out here. But after Tyson Foods and some of the other ones dropped the chalupa this week on earnings, anything's better than the super bad out here. But what else can you say? Dollar Tree had earnings out this morning, DLTR, if I actually type it correctly, DLTR. Nice pop on this one. Same thing. A lot of these things had huge gap downs on volume. Volume a little bit better on this one. It came down with 15.5 million shares. We got about 10 million shares so far. It's gotten right back up about halfway in the gap. That's where I like to pull the trigger on them. This probably would have been a nice intraday short for a few bucks out here, but I just didn't see that much on it. Like I said, you want to see at least 15 million shares out here, but my guess is that you get in about 92 bucks, you're going to have a great deal more resistance going forward. Designer Shoe Warehouse. This one is up 8% today. A lot of these all have these same patterns, which is big gap downs. This one happened on August 30th with 10 million shares. Into it today with 4.3 million shares. Pretty much filled that gap and then started to sell off a bit. I'm not sure on the whole shoe thing out here. What else do we have going on out here? Oh.
You mean spam?
Yes, it's wonderful spam again. Makes my day to be able to report on Hormel Foods and their spam. A huge move out here today, higher. You know, it popped higher. It's kind of sold off today. Volume's okay. I don't see a great deal out here. As far as testing the bottom, you know, it came with just a tiny bit lower test of the June 24th low at 5.9 million shares. On the 21st here, just a couple of days ago, with 5.6 million shares, but that's not enough out here. Another one that probably has issues. And again, any of these food companies after Tyson seem to be rather suspect by a lot of investors. Something that continues to be troublesome for the entire industry is the look of these internet security companies like Palo Alto. This one has been kind of working down, way overpriced earlier in the year. This thing used to be $194.73 when we go back to December 3rd. This was the bell. If you were going to own a computer security company, you had to own this one. Not exactly sure why. I thought that they were more generic than the rest, but seems like the street finds a stock and they say that stock is the leader. Whether it is or not. This one is kind of coming back a bit today, certainly on huge volume. You never tested the 111.09 short high volume low from February 8th. My guess is that this is going to have to come back and test the area before you get any kind of big-time low. When we look at others in this sector, off a little bit today with some decent volume, but again, this one is a little different. FireEye has had a test of the low, did come off. Maybe you get 12 bucks or 11 bucks on this one. CYBR is the other one in this sector that seems to be rather interesting. Same kind of thing on this one, although you might make a case for an ABC down. I suspect that if this comes down in the $47 range, this might be a very attractive stock too. Valspar, almost no movement on it on earnings. It's about 18 cents different, but I don't know. It's being bought out anyway. I don't know if it matters that much. So that's about it. You can always give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always post a message in the den. Let's just check back into this market real quick and see if there's anything else happening. It's been kind of quiet. There we at 2,200 on the S&P cash volume, 2.65 billion shares. Again, you don't want to hit highs on a lighter volume, but we've got an overwhelming trend out here, and that is, for the most part, the sickest of the stocks have already been sold for the end of the year. You don't have a lot of people with weak hands out here. You also have a lot of people thinking about a lot of other things, going to grandmother's house for Thanksgiving. And God help you if anybody has cranberry sauce out of a can. It doesn't take very long to actually make good cranberry sauce. Just say no to family members that use cranberry sauce out of a can. My pet peeve. 2.65 billion shares. Anyway, we're out here at 2,200. My guess is that we're going to see a slow move probably into the close tomorrow, and that's going to be a squeeze for anybody trying to push these stocks down today. Not a great deal going on out here, but again, not a big move on most of these stocks. But we'll take a look at some others. Like I said, email me at path@tfnn.com. If you want to take a look at anything, post it in the den, or give me a call at 877-927-6648. Some other stocks that were giving some signals. Wanted to see how these things, especially on the move in crude, were doing. You're coming up against rather massive resistance levels in Halliburton, although I would want to be pulling the trigger just yet. We'll talk about yet another double gap out here, and where the best place to either sell or be on Halliburton. We'll be back after this very short time out.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And you got a few things moving out here. Everybody's getting on the bandwagon with United States Steel. Nice 19, almost 20 million shares compared to the 16 million shares on July 29th when this one peaked. So you got a high out here with a little bit of a sign of strength. Of course, you had 2 gaps up. Probably going to get one more out here. We were talking about Halliburton when we were out last, and just said, normally just everything we've seen with these double gaps over the last 6 to 8 weeks shows either on highs or lows that these things are just loving these double gaps. This one goes back. The gap up happened on the 14th of November 2014. The gap down then the next day on the 17th, and that forms that double gap. And these things just love, or at least all stocks seem to be loving this coming back to this double gap areas that we see. So on this one, what is it? I'm going to call this thing at about $52. But that's where you want to look at this thing. That is where you're probably going to find a wall of sellers between now and Christmas. I don't understand the whole idea of running into crude every time Putin or somebody says anything. It hasn't really changed anything. But, man, are people really euphoric about anything that is tangible right now, and that may tell you something actually bigger out here than a lot of things. Let's go out here. Global Master Service, SLV. Not a whole lot out here to look at in the gold stocks and the silvers. These things have kind of been languishing. In the SLV, you kind of have the first level of support that goes back to the 3rd of June. The next one goes back to the 11th of April. My guess is that 11th of April area is the first level that you'd want to take a look at. That takes you bring into about $14.60 to $14.80. My guess is that's going to continue moving out here. At least today, not a lot of push one way or the other from the dollar index. It's up a nickel at 101.10. Take a quick look at the TLT. I don't see a great deal in the dollar out here other than it consolidating a lot of its move from back up in the lows. Now that it is going rather sideways. Okay, let's get this just a little bit out here. You are coming up on what should be very strong support, and that's at about 119. That is a gap that's been opened back from the 6th of January last year. So we're basically coming back to this same spot we were at just a year ago, in 3 months or so. So it'll be interesting how this comes back into this congestion zone that ran from the 1st of December all the way into pretty much the first part of this year, and whether or not we're going to see the exact same thing, which is we've had a big push. We've got up here and we got new highs, and come January 1st, everybody's back to sun. And it took, 6 weeks, mid-February, before the rout was pretty much over, and we started moving back up again. But a lot of sideways action. Come on. I don't know why everything's so slow today. Seagate Technology, watching this one a little while. It had a high just on October 3rd, $39.33, 4.9 million shares. Tested with 2.1 million shares yesterday, down on 3 million shares today. That may tell you a great deal. My guess is that why this may hold up to the 1st of January, this is a business that's in big trouble. Will be in the next few years supplanted by memory. The idea of having a spinning drive, or even a drive that looks to the computer through software and hardware like a drive, will probably be gone fairly soon. And that means that Seagate, Western Digital are kind of out in the cold. I don't see a real good way for these guys to get out of the cold. But again, probably going to hold up into the end of the year. But nice light test. Western Digital, where it started gapping down back on the 11th of December 2015, it's gotten back up there as of yesterday. It was some okay volume of 15. He kind of spiked it a while back on the 27th with 15 million shares. Got into it yesterday with just under 4 million shares. Today, a little pullback on light volume. Again, wouldn't be pulling the trigger on these. These look to me like a beginning of the year play. I just don't see where these guys are going to be able to make their money long term. And one of the easier low-hanging fruit sectors in the marketplace. SU. Make sure I have any more emails out here. Suncor Energy, this one, let's go to a little longer time frame. It's kind of gone up through its move. You got 33 and a half, $30, $33 to 33 and a half is where real resistance comes back in this one. My guess is that until we get the meetings about OPEC and Russia and whether or not any of them will actually do anything, we could see a drift, especially since gold's not doing a lot. I have a feeling a lot of people want to be in crude as the safety play right now. I don't think crude is anywhere near this good, or the energy sector, but it does look like a lot of people are hiding out in those sectors. Thor Industries. I wonder if they have a big hammer they throw around in the office. Anyway, nice big pop September 28th, 3.3 million shares at 78. Excuse me. He said 87.08 on September 28th. We've gone through that with about 500,000 shares so far, so 1/6 of the volume. No real juice in this one either. But again, a lot of these stocks, especially going in December, you can find these things going up on no volume. You want to track these because these are the most attractive stocks if you're going to pull the ripcord and go short at the beginning of the year. Tractor Supply blew up on earnings last time, gapped down on that September 8th earnings call, 18.2 million shares. We're back up into this thing with 75.32 is the high today, but just 1.3 million shares, 1.4 million shares. So fairly light. Again, you'd love for this thing to kind of drift back up into this $80 range, and that would be very interesting. Well, we got a few more stocks to look at. My last little segment. It is Tuesday, so we got Tom O'Brien for the next 2 hours. Any heck in the 5 o'clock hour of hot commodities. And that may be the only thing moving tomorrow. If you poke it with a stick, maybe something will be moving.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And with just a couple of minutes to go here in the show, just a reminder, I will be gone tomorrow. I'll be back on Monday. But look for light volume, probably starting at about 10:30 or 11, and a quiet day into the end. On Friday, markets open half a day, and then, of course, what most people are looking for are at least some hint of the Black Friday sales numbers. Sometimes you get a decent move come Monday, and maybe even to the futures on Sunday night with how much retail buying's been going on. Some people made some fairly decent points over the last week or so in that Black Friday may not matter, or at least doesn't matter near as much. My guess is we're already getting a little bit of that. When we look at Amazon, this thing came down with some very decent energy, back down to $710. That's the November 14th low. It's already made its 618 retracement. That's 794.83. It pretty much hit that today. What did it get to? 972. So a couple of bucks within the 618. My guess is this thing probably hits this gap up, and that's what's the high that day? $800. Probably make 801, 802, 803. That would set up an ABC to what I've been talking about for a while, which is this 660 level. And then guess what's right there if you did a one-to-one ABC, and that is this giant gap up from April 29th, 2016, where this thing really took off. I think that there's some reasons why we could figure that Amazon could come back to that level. The first is they're spending absolute massive amounts of money trying to displace FedEx and UPS and buying planes. Question is whether that goes smoothly, how much money they put into that, and how that works out for them. Does it go smoothly? The other reason is that these guys continue to stick their thumb in the eye of regulators for anything approaching what would be called antitrust. Literally, they've left 1,000 things for them to be really looked at as a serial antitrust violator. Not only have they pleaded guilty to some things in the past, you've got to separate the stock from the actual company. I think that's probably one of the hardest things that a trader has to do. I wasn't surprised the thing came off. I thought maybe that would be a little less, maybe it would be a little bit easier to figure out, but I was pretty sure that the 660 level, 650 level is probably where this thing is headed over the next 6 months since its earnings move out here. But you're just kind of going to come down. Everybody wants to own Amazon. There's got to be another reason to own it other than that. And it looks to me like the headwinds are probably more likely, especially legal, than anything else with Amazon. But a nice move. Maybe I'm wrong. I am not long or short Amazon, but going to say that the signal whether or not to be long or short may be coming up here in just a day or two. When it hits that $800 level, you can see. If you played the bounce, that is going to be where you're going to decide to get out or continue on. I just have this feeling this thing's moving back out here, at least to the breakout area, the last big sign of strength to 650, 660. In the meantime, sell when you can, not when you have to. We'll see you Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.